people have forgot about how hard it is to do some of these things. And quite frankly, that not all merchants are going to do click to agree. And so you've got to create the right model for your software business, which is directly correlated to the type of industry and the merchants that you deal with.
Welcome to Embedded, unveiling payments' latest innovations, the revolutionary podcast presented by Fortis. This podcast is not just about payments, it's about revolutionizing the way we transact. Whether you're a payments professional, a business owner, or simply curious about the future of transactions, this podcast is your resource for knowledge and inspiration. In this episode, Timmy talks to Cohen, the CEO of Fortis, to understand his thoughts on the change in the payments industry over the last 3 decades, how to survive the business winter, and myths that surround PayFac versus the facilitation of payments. And now your host, Timmy Nafso.
Hello, everybody. Timmy Nafso here. Hope everybody's having a great day. Exciting to be launching our podcast here. And I am blessed to be able to discuss on the first episode with Cohen, everything payments. Greg, welcome.
Thanks, Timmy. Appreciate you letting me crash your episode here and hopefully get you going with a bang.
I really appreciate it. We're really excited to hear all of your thoughts. Get everybody to know you and us, and continue to feed the merchants, businesses, software companies, payment professionals, everything payments here. So let's kick it off here, Greg. We've obviously known each other for quite some time, dating back probably 8 to 10 years, I would say, or so. But you've been in the payment industry a whole lot longer than that. If you could tell us a little bit about yourself, but also right behind you there, I see a couple of wings of a plane is what it looks like there, right? If I'm not mistaken. If you want to tell us a little bit about how you got into the payment industry, but also tell us about your plane experience, because I think it's a really cool story that I know that I think others should hear as well.
Yeah, no, look, I have been in the payments industry 28, 29 years now. It's funny. I didn't expect to back then. People didn't like pick payments as an industry to go into, like maybe if you came out of college today. I'd actually come out of business school. I was in a completely different industry before going to business school. I came out of business school, and a friend of mine was a controller for a small payments organization, and said, I don't know much about, sales and marketing, how this all works, but I work for this guy and he's making a lot of money, so we should go do this. And coming out with an MBA, I'm like, well, I know everything in the world about sales and marketing. And so $10,000, a credit card, and we were off, and I was a entrepreneur for my first few years. And I learned a lot. I would call it an extension of my MBA. It was not a great exit. It wasn't anything like that. But I learned an absolute ton during that 4 to 5 year time period, and then migrated my way to early global payments. A matter of fact, right when it spun out of National Data Corporation. And one of the funny things is most people don't know that global payments was a corporate carve out. It wasn't just started, kind of organically. It was part of a business called National Data Corporation that did healthcare processing. Later on, National Data Corporation filed bankruptcy and disappeared. And global payments is the, multi-billion-dollar business that it is today. So I was in the early stages at global payments, and so
how many
kind
people,
of interesting. My
how many people
there.
were there at that time? What was the size, would you say?
I think we maybe had 1,000 people, if that. We had just made the acquisition to move into Canada through a acquisition of HSBC's payments business and CIBC's payments business, and so it was kind of an interesting way to kind of get into the Canadian market. But it was, I had all the third party channels, all the ISOs, all the banks, all of those folks. So I've been a channel guy from my early part of career within payments, and believe that distribution channels and partnerships are core to, making business work. And so I've kind of always taken that partnership approach to it.
Was a quick question there, dating back, right? And again, not trying to say how many years exactly the payment ecosystem has changed quite a bit, right? I entered 2002, 2003 as an agent and started selling payments from a sales perspective. I remember the merchant processing application was a lot different than it is today, right? We had to actually mail in at that time the application signed, and then you have to wait, and there was a waiting game. At that point, are we talking knuckle busters? Where were we as it relates to the type of equipment that was being used to actually process payments?
Oh yeah, I think it was mandatory that every merchant have a knuckle buster, but we were shipping early age Verifone terminals, right? Zon Juniors, and then we migrated to these things called Trans 330s, where the resistor, and we were connecting transactions on 950 numbers. Right. There was no internet connectivity of any way, shape, or form back then. It was, and I do remember people would submit merchant applications with Polaroid pictures so that you would make sure that the store, you take a picture of the storefront so you get the sign, and the inside so that you could see that there was inventory, and that helped manage risk so that you could see that it was real. It was kind of very different than we see today with auto adjudication and the stuff we can do on the internet and being able to, know within, a block of where, somebody is running a transaction. It's kind of crazy to think how fast the world has moved since then.
Yeah, that is awesome. It's really funny because back then I actually used to, at my family's hotel, sit there at the end of every single day and key in every single transaction that happened. And if a decline occurred, we actually wouldn't know until after the fact that a decline occurred. And direct billing and checks were a lot bigger, obviously, during that time. That's awesome. Yeah, thanks for sharing. So shifting over a little bit, personal side, a little back to the plane comment there. So during this process, you graduate, you have your MBA. How far into the enjoying payments did you say, look, not only payments are a little bit too slow, that needs to speed up, but also transportation seems a little bit slow, so I'm going to start hopping on a plane?
Well, it's kind of funny. When I first got my private license, it really kind of coincided. It was a few years after kind of 9/11, if you really want to think about it. And traveling, not that it was ever easy or this, it just became really a big hassle. I had moved from Atlanta with Global. I had actually become president of a business called Moneris, which was a joint venture of Royal Bank of Canada and Bank of Montreal. And I had moved to Chicago. And, I did one of those like discovery flights where you just kind of fly around the Chicago area, and it's beautiful, right? You go down the coast, the lakefront and the big buildings, and I just caught that. It was just cool to me. And I started on my private, and it was hard because, working at the same time, it's almost like two steps forward, one step back. But I've always been that guy who, if you're going to go start something, you're going to finish it and you're going to go do it. So I pushed through. It took me about a year to get my private license. Took a little bit of time just kind of enjoying that, another year to get my instrument rating, and then just kind of moved up from that, made some great payments friends in flying itself. Early on, because I was in Chicago, I shared an aircraft with David Nelms, who was the first CEO of Discover. It was kind of interesting. We were at the same school at the same time, and no, I didn't paint the plane orange or anything like that, but we just had a good time. And, he obviously grew way out of my class from the type of aircraft he could fly quickly than I could. I was running a business for a bank. He was the CEO of Discover, but made some great other friends along the way. Since then, I think all of us know kind of, when you look at the path of Jared Isaacman and things like that, of what some of the payments people have done regarding aircraft or even, going into space. I've been lucky enough in my life to be able to sit in the back of a MiG with Jared flying it in the past. And it's just kind of an interesting kind of camaraderie. We have Henry Helgeson, who was the former CEO of Cayenne, where I was, that got sold to TSYS a few years ago for a little over $1 billion, a nice unicorn. He and I are good friends, and I've gotten to go up with him a bunch of different times. So there's kind of this interesting little passion. I didn't know that when I first got it. It's just something that I really, really enjoy. And the thing that I always like to tell everybody, people ask me what I like about it. When it's gray and rainy or nasty or stuff like that, and you have one of those, humdrum days, as soon as you bust out of that cloud layer and you come on top and it's sunny and beautiful up there and you just escape. And to me, that is just the most amazing time in flying, is just at the bottom layer of those clouds, between, gray and nasty down here and just, heavenly above it. That's kind of the fun part.
All right. Well, let me tell you what's going to happen now. I think that it sounds like you will be taking me on your plane because we had this discussion that will be happening. And I think I'm going to film it if possible to just really, I haven't done this yet. Right. So I'm nervous because I've heard it's shaky. But I'm definitely down to try it. But that's awesome. I'm really looking forward to that attempt. If you'll have me on the plane, of course, Greg. There's like a lottery going on. People trying to
just
get on.
Don't touch anything. You'll be good. Awesome. Yeah. So really, it's been really interesting over the last several years. Obviously, COVID changed the entire environment as to how business is done. We've seen a lot of the economy shift over the last several years. We've seen things change as it relates to not only the payment ecosystem, but the markets in general. I wanted to get your take on what's happening not only in payments, but in the greater market, because payments affect and touch so many industries as we see. And so much of the initiative that we've seen Fortis put forward is kind of this invisible payment experience, this experience that allows this embedded type shift that didn't exist a decade ago. I would argue didn't exist 5 years ago, but now it's this thing that people can't quite understand. They're getting their arms around it. And I feel for the merchants, for the businesses that are out there. I feel for software companies that are trying to make changes to what was true that no longer is true today. And the pace is extremely fast as these changes are happening. So we'd love to hear your perspective on the market. You've been to a lot of places. You keep a close eye on it. The market, how is it looking from your perspective? Yeah, I would look. I think the market is, and we're kind of at an interesting inflection point today, right? If you think about kind of where the world has come from and gone, I think the early days of kind of marrying up payments and software came with, I probably think about Mercury Payments as kind of the first big player in that space, and really it just it really turned the software providers into a distribution channel for payments. And it worked inside of the software, but it was kind of more about distribution, right? And then we morph into these new worlds where it really becomes about the experience. And I think one of the things that you have to think about is Tim, even when you started in payments, or definitely when I did, it was kind of a one size fits all. That same terminal that we talked about worked for every kind of business. And even if it was an e-com business, maybe you were keying it into the terminal like you talked about. Software was pretty much the same way. You had some pretty generic software applications, and it was kind of, you used it for everybody. And I think both from a software standpoint, different experiences have become so vertical. Payments as well as software, it's created these vertical opportunities to extend the value proposition. And so that verticalization of software and payments, which has been a big catalyst of that as things moving to the cloud and the connectivity and all the other pieces we have, that's what's kind of gotten this on a hyperdrive to put these things together. And then I think over the last 4 or 5 years, what we've seen is the software providers really realized that they are the hubs for these businesses. You can be in the hub in the back office, you can be the hub in the front office. There's different, points of that kind of presence. But that hub, and now to extend the value prop of that hub, it's how do I add other solutions to that? I mean, if you think about the iPhone we all have or the Android phone we have, there's this store around it, right? And software, for a business application is no different. Like, what's that application? And now how do I add new apps to that to add value? Those apps could come in the, time and attendance. They could come in ordering. They could this and that and the other. But payments is a really natural add, right? As one of those apps that plays within that. And how does it have to work just brilliantly to have a good experience? I think everybody looks at Uber or Lyft and says, wow, that's how I want it to work for me. When we went into COVID, we went into warp drive in the restaurant world, right? In the grocery world, when people weren't going out and touching each other. So we put into warp drive these other experiences around order and pickup and things of that sort that have really been this catalyst of bringing all of this together in a vertical standpoint. But I think with all that said, I think when you look at the way that all this has grown, and if you think about the last, if I go back 2 years, the last, since the financial crisis, but let's kind of say since 2010, there have been billions of dollars poured into kind of the cloud growth of the world, the speeding up of transactions, all of these things. COVID helped, there was money pushed out behind that to drive these businesses. And it was really just about grow at all costs. And I think some of these businesses got ahead of their skis, right? And not that the businesses maybe themselves, but maybe some of the valuations and the investors around those businesses, right? My job is to get as many users as I possibly can. Reminds me of 2000 when the gob was, how do I get as many eyeballs as I can, right? And then all of a sudden people realize, wait, eyeballs or users don't necessarily correlate to making money, right? And then the world shifts and money's more expensive now than it was before, right? You've got the different interest rates, you've got a different sentiment, and all these businesses got ahead of their skis. So the valuations, many of these are very good fundamental businesses, especially the bigger scale players. They were just ahead of their skis and from a valuation standpoint. We've seen a big reset of that over the last 2 years. I think, the companies that have already grown to scale will probably focus a little bit more than they had in the past and try to, instead of being all things to all people. But what you're going to have is some of the really small folks who couldn't quite get to that next funding round really have challenges, right? You don't need 800 embedded payment providers, right? Maybe you need 80. Right. So what happens to the other, 720 that are out there? So we saw this with tablet POS. How many do you really need to be in any one given market? So you're going to have a bit of a thinning of the herd across all of these ecosystems, but it's going to force some of these companies are actually going to get better because of that. It's going to mean capital is going to have to work smarter than it's ever had to work before. But those underlying fundamental themes of what's happening in the market around verticalization, around a unified service, around kind of having a hub and spoke capability off of that. Those thematic things are here for good. And things like AI and other things that we always joke and talk about and are the future. That's just going to help. It's going to help make that stuff happen better. But it's going to cause that focus and a different investment thesis around a lot of these businesses about what they're really worth and how they're going to go. And I think that's what's scared a lot of people right now because, you're either going to be, if you get left out of this, you really wind up in a challenging position. So it's how to pivot, how to focus, and how to use and manage cash in this time frame where it's hard. And it's difficult when you've run a business for all about growth. Right? Bottom line never mattered. And now I got to go manage a business to a bottom line metric. And I've got to, sometimes say no and do those things. And I think that's some of the challenges that businesses are dealing with right now. And that's not just a payments thing. That's a fintech thing. That's a technology thing across the board. I mean, capital's expensive right now. And smart capital can be very, very picky. So you got to have a good focus and a good business.
Yeah, absolutely. We look at business, we look at the seasons of business and, folks like Jim Rohn at the time and, Tony Robbins, other, thought leaders and motivational leaders talk about business as well as what season we're in business. And some of the strongest businesses have actually been built in what they call winter. And that when things were tough, and it was really hard to kind of grow, those businesses that understand how to be scrappy in winter certainly survive really well and earn well and so on and so forth when summer comes. So do you believe that from an economic perspective and from an industry perspective that like we are in winter? Do we feel like it's fall and we're going into winter? A lot of people have different perspectives on that of kind of what the bottom looks like to a certain extent. What kind of is the vibe from your perspective there?
I think it depends who you are and how you manage it, whether you're in fall or winter, because you're in one of the two. So
that's right.
If you're a business and your valuation's already been smacked pretty hard, you're probably in the middle of winter right now. If you're a private company and you've self-funded and you're moving and you're managing on a cash basis, you probably think it's fall. Right. And quite frankly, maybe you take a different approach to, okay, here's where the world's going to go forward. But I 1,000% agree with what you said. In these times, are when, if done right, companies can really refocus around their core value proposition and get rid of all the other damn distractions that are out there. Everybody chase this or that. I'm going after crypto or this. I mean, you throw out your buzzword of the week, right? And focus on your core value proposition. Double down in that, get rid of all the rest of the noise. And yeah, that might mean there might be some people involved that were working on that noise, or, a division you need to spin off or even sunset. But focus on that core competency, and great businesses are often made and coming out of winter, right? Because it tends to be when other people are playing defense, gives you a great opportunity to play offense.
Absolutely. Yeah, I love that. And when you think about that, even from a payment perspective specifically, and products and services, we know, as an example, myself being so close to what's happening at Fortis, of course, that, we've launched a lot of products and features that are there to help not only software companies, right? Because the software company themselves really need an offering that then helps the merchant that uses their software, that then downstream helps the consumer, right? So if we were talking about restaurants and COVID a few minutes ago, something like being able to pay at the table, which then became curbside payment. Well, that technology is not there. It makes things a lot harder to transact, as we know. So knowing from your perspective what those important features are and products is really interesting to hear, because one word that we constantly hear about is PayFac, payment facilitation, that there is this product that if you're not on that train, that you're going to be left behind. From my perspective, that's a misconception to a certain extent. I have a belief that there's kind of this omni-channel approach, that there's not one train that you're really on. You're running, multiple modes of transportation, be it flight, no pun intended, be it a train, be it automobile, a bike, whatever it might take. We need all vehicles accessible to us. So kind of debunking the myth of, PayFac, or that you have to be a PayFac, versus the facilitation of payments is something I'd love to hear your perspective on as well.
Yeah, I agree. I hate to say I always agree with you, Timmy, but I do. And I think the whole construct of I have to be a PayFac got way ahead of itself. It was a buzzword. Investors picked up on it. Software providers picked up on it, and all this stuff got thrown at it. Now, where I agree with the concept is, if you flip the terms around, that most software providers should be a facilitator of payments within their software, right? Especially, if you're doing commerce, you have to do payments, right? Nobody wants to pay, right? People want to shop and buy. Nobody wants to pay. So how invisible do you make it? How do you embed it? And how does it work? But the operationalization of being a PayFac, as it's known from a card brand standpoint, has a huge amount of overhead to take on, right? Underwriting, risk, compliance, AML, KYC, everything from that to I got to understand how to, drive adoption in my customer base, all of these things. Oh, by the way, and I have to authorize and settle and some of these things can be rented from other people as well. But, going full board all the way and being, a registered card brand PayFac, that's a lot of work. Great companies like Stripe, and I know, FIS bought a company called Payrix, and we offer a kind of what I would call a managed, facilitation program where you get the same experience, but you don't have to build out that operational infrastructure. And then the other piece I think everybody forgets about, and I always like to point them to some of the public companies. When you look at Lightspeed, and they always talk about what percentage of their customer base is actually using their payment solution. Look, adoption is so important. You can create this amazing experience, but if nobody uses it, or you don't get enough people using it, it doesn't matter. And I think, everybody assumed that the way that Square went to market was the way to go to market. You throw it out there, click to agree, it's all done. And if you think about where Square started, right, in the super micro merchant base, right, in areas like that, that kind of works. But as you move up into complex verticals, sophisticated merchants, businesses that want to and can negotiate, and you talk about how to solution in a true omni-channel environment where someone's got an ERP in the back office, a website managed by some other company on their web, they've got a call center, and you have to make all of that stuff work. That's not a click to agree solution. You got to get on the phone and solution, and then you talk through it all works. And people forget about driving adoption. And so when I think about the operational capabilities of payments, the adoption of payments, right, and then the monetization of payments, right? And so, of course, every software company needs to monetize in some way, shape, or form. But all three of those things need to work in harmony. And I think people have forgot about how hard it is to do some of these things. And quite frankly, that not all merchants are going to do click to agree. And so you've got to create the right model for your software business, which is directly correlated to the type of industry and the merchants that you deal with.
Yeah, and that really just reinforcing what you said earlier about the verticalization of that, because if you're everything to everybody, nothing to anybody. So like there is this concept of, hey, look, if we do want to get vertically driven, we're able to experience something for each vertical that's a little bit of a different flavor. And each flavor does require something that's absolutely unique to that respective vertical. I think, one thing that the world longs for that it didn't have before, right, that kind of over the last 40 years, and we're going back to it because of technology, was people like to know who they were buying from, right? Thus the review processes that we see out there when somebody's buying something from Amazon or whatever it might be. People also understand that this general solution that you mentioned, even when Square came out or some of these other solutions, the ecosystem, there weren't many terminals out there. There weren't many options. Cellular phones were fairly new in 2010 as a quick example. So that also has shifted the entire landscape of what happens and how it's happening as well.
Yeah. Oh, yeah. And as technology morphs and in some ways we all follow the big guys, right? The way, how will the Apple ecosystem and the Google ecosystem and the Microsoft ecosystem morph? And we've got to work within those constraints. And sometimes it's not technology for technology's sake. It's the use case around it. When I think about new things like whether it be FedNow or Apple's Tap to Pay, like Apple's Tap to Pay rides an NFC kind of transaction rail construct, right? When I think about FedNow and what that can speed up, a lot of that has to do with the payout capabilities. But is that going to replace a standard deposit? Probably not, right? And so what are the use cases we can use technology for to win? Technology by itself doesn't win.
Really quick, Greg, if you don't mind, FedNow, just a quick, some people may not have heard that term, of what that actually is bringing to the market from a FedNow perspective.
Yeah, it's kind of real-time payments or FedNow, kind of two different networks, kind of a going after the same construct. It's really to be able to put money in or take money out of an account almost instantaneously, right? It's a direct connection of financial institutions to be able to do, direct money in and direct money out. If you think about it, I mean, this is going to sound really basic, but it's a automated way to do a wire at a lower cost, right? Like if you think about the value prop, and now you start to think about where that could be valuable in different things. I mean, some of the early use cases are B2B transactions. Some of the early use cases are payouts. Think about trying to pay a waiter out every night, after you're at a restaurant and you check out and things like that. Like there are lots of things like that become the early use cases for those solutions. And I think that those will evolve over time, and it will sit next to ACH transactions. Card isn't going away. Visa, MasterCard sits in the middle of a lot of these things. I know it feels like every 4 years we have something that's going to disintermediate, the card brands, whether it be buy now, pay later or crypto, and they still sit in the middle and control the flows, right? And so
they absolutely do.
I think it coexists, as do all the new alternative payments. When you think about, Venmo transactions or WeChat Pay or some of these other things that are continue to evolve over time.
Yeah, people always think one has to die for the other to live, but I think the payment industry has actually proven that over and over again, that's not true, that they do need to coexist. E-com is coming, so that means brick and mortar dies. No, actually, they live together, and it's necessary because the habits of us as human beings. We have early adopters, late adopters. There's their entire bell curve of how that all works, and we have to consider all aspects of that curve as time continues to move on. With all this complexity, one of the things that we're seeing is a big push into kind of this global economy, global market. I know Fortis recently entered into Canada aggressively, and was that move because hey, we just got to check a box and be in Canada? Was it a need from customers, a customer first approach? What are you seeing in the market that's kind of demanding this work to go into Canada, but then also a global presence in the future?
Yeah, I think there's two things. One is you got to support your consumers, right? If you're going to sell the software, a business, the business wants to be able to accept consumers from everywhere, right? So number one is, how do I allow ubiquity of acceptance? And so if a consumer wants to pay, I got to be able to accept those different types of payment tenders. Now, I think I'd say, let's be pragmatic on what tenders really need. A lot of people rushed into crypto acceptance, and then it wound up kind of flaming out. But to be able to accept transactions from your global consumer base is important. The next step is, how do I really support my software companies and the businesses that want to expand their own geographic footprint where they are themselves? And, one of the things we've seen is we have lots of software partners that want to move. It's kind of a natural U.S. company moving to Canada, right? You'll see that. Then often you see them move to the U.K., Australia. They just tend to follow English-speaking countries. I think as you're writing software and you think about the way that, you need to worry about, different, things, the way your software would work, that tends to be the flavor of how it goes. But, you're following your software companies, right? If you can't provide those solutions as they want to expand, and I've never met a software company who at least has a desire for global domination. They may not get there, but want to do it. You've got to be able to expand with them. And so for us, Canada was the natural extension before we kind of jump over the pond and start thinking about the EU. And so I'm excited about what we can do. We've got a lot of launch partners with us as well. And it's a great expansion. I wouldn't, without a partner, without a market, and just kind of hoping you can kind of drive business, it's a lot of work. I'm not sure we would have done it if I went back 10 years, but now with the way software thinks about the world, it was a necessity.
Yeah, no, awesome. No, I appreciate that insight and feedback. So in, closing out our first episode of Embedded here, Greg, any final thoughts for software companies that are out there, businesses that are out there, and love to hear those final thoughts, and any final thoughts for Timmy in his first episode here.
Yeah, well, first of all, for you, I would say good luck. Keep it up. This is a great platform, and looking to see what you can deliver against it across all the fun stuff we've got coming. But for everybody else, look, we are in an interesting time. And for me, I think for our company, as well as I kind of tell everybody else, it's a time to focus. It's a time to really think about your priorities, kind of get rid of some of the distractions. We call them squirrels, get rid of the squirrels and really focus on what you do best and where you can add the most value in the marketplace, because it's going to be a little bit turbulent, right? We're going to have our ups and downs in the market. You cannot control the economy. You can't control the Fed. It's going to happen. And so in order to prepare for that, I think the concept is, how do you focus on your core competency, batten down the hatches, and that opens up the capabilities to go on offense in those areas if you can shed the other distractions. And what a great time to go on offense when everybody else is on defense. And so that's kind of my mantra. Awesome.
Thanks, Greg. Thank you so much for the time today. And I will be seeing you soon.
Sounds good. Thanks, Timmy.
Thanks.
Take care.
Thanks, everybody.
3 takeaways from this podcast. The world of payments is in an inflection point, and the one-size-fits-all approach is rapidly evolving. So if you want to stay relevant to software providers, you must be looking to add value from partners to build around your tech stack. Number 2, when considering if your business model should adopt a PayFac solution, working with a payment solutioning expert can be critical to ensure you consider all the factors that are at play. And number 3, Today is the time to focus and think about your priorities and where you add value in the marketplace while times are turbulent. Greg said in his interview that we need to stay on offense while everyone else is on defense. Well, that's the episode of Embedded. Do us a favor and leave us a 5-star review if you found this valuable. And if staying up to date on payments, software, and emerging technologies makes sense to you, make sure to subscribe.